Tyler, just can you double check YouTube for me as well, please? It shouldn't be on there. It'd be like 30-second delay. All right, everyone ready? Gonna admit everybody? All right, cool. All right, everyone's connecting to audio. Great. Tyler, just can you double check YouTube for me as well, please? All right, that works. All right. I see some people joining in. This is good. Okay. I see some people joining in. Great. We're going to give everyone a couple minutes to get in. Hello, Todd. Hello, Vicky. Hello, Tim. Looks like. All right, cool. So it is 3:01, guys. We're going to get started in just a few minutes. I'm going to still some people getting in here. I hope everyone's having a good Thursday. It's almost Friday. I will start off in saying that we will be muting everyone to begin with, just because we have a huge house today. So to make this flow a little bit easier, we're going to be utilizing the chat functionality, which I will chat right here. I just typed hello to everyone. I have a question from Tim asking to record. Tim, you're more than welcome to record, but we will be releasing this on our social media and our YouTube channel. We're actually live on YouTube right now. So if you'd like to record it, go ahead, but we will have it available on our YouTube channels and our social media after the session is done. So your call. Again, there's a couple people getting in. I will again say that for this time, everyone will be muted for the duration of it, and we'll be utilizing the chat functionality. I just sent a little chat saying hello. I'll send another one just so everyone sees it. Hello again. And I still got some more people coming in, so. All right, it's 3:03, guys. We're gonna get started. So first things first, my name is Corey. I'm from Nutmeg State Financial Credit Union. I will be kind of emceeing the event today. If you guys were on our last one last week, or 2 weeks ago at this point, it was me and Shane kind of go through some Q&As. So just to go over how this is going to flow, like I said, Shane and I will be the ones kind of chatting. We'll be going off some questions that were sent to us a couple days ago throughout this, as well as some of the overview of the PPP program. And then throughout the session, we will break from time to time for questions. So if you guys do have questions, please make sure you utilize the chat functionality. That's the only way we're going to be able to answer your questions, because we do have a full house today. We have about, right now, I see 53 people into this meeting. So for a standpoint of, so it flows and to respect everyone's time, we'll be only doing questions through the chat. So if you need to find the chat, remember it's at the bottom of your screen. It should be highlighted as I type in. I'll send one more hello to everybody. So that being said, I'm going to turn my screen so you'll now see Mr. Dugan, because he is much more handsome than I am. So ladies and gentlemen, this is Shane Dugan. He is our AVP of lending here at Nutmeg State Financial Credit Union. Shane hired me 7.5 years ago, so you can thank him for this glorious mug. But now, Shane, I'm going to kind of turn it over to you so you can start.
Yeah, so hello, everybody. I recognize a ton of familiar names on applications that I've been going through over the last couple of weeks. So it's great to see some of you in person or virtually, right? But getting to connect faces to names and, hopefully continuing to work with you guys. So I'm really excited that we were able to help everybody that's on the call, get the money that they need and certainly, working with you all. It's just an exciting time in that aspect. While it's been a lot of long hours helping everybody, it's been great to just be able to get out there and really, support the business community, which is, what we're here for in the end. So, like Corey said, if you have any questions, I'd be happy to answer them in the chat. If they are very, very granular to your business, we might defer that and probably follow up on your individual question, maybe one-on-one. If you happen to have a very specific question like that and you're not comfortable sharing it in the chat, we will share the email address. It's been businesslending@nutmegstatefcu.org in the chat at some point. And you can always email us through there and we'll get back to you in regards to those questions. My hope, though, is that we can cover enough today that it'll give you a good understanding of what you can and can't use the funds for, and what to expect come forgiveness time. With that being said, as has been the last month in my experience so far, the SBA does continue to develop guidance on what seems like a almost daily basis. We are hearing new information. We have not received every tidbit of information on the loan forgiveness part. So this is all information to the best of our ability as of today. It doesn't mean that the SBA can't change something. There are certain things that we're going to talk about too as well, which are not set in stone yet, but the best guidance that we've got so far. So a lot of the forgiveness part, it sounds like in the next 2 weeks should be at least starting to be tied up. But this should give us a very good understanding, I think, of what to expect and how to prepare yourself to ensure that you're ready to submit and have your loan forgiven in the end. So, again, excited to have you guys all engaged in this and looking forward.
Awesome. Thank you, Shane. So we will start off kind of for those that were on our first call about 2 weeks ago. That went, thank you for the people that are repeat attenders. Thank you. So first things first, let's recap what the purpose of the PPP is, and let's just remind everyone the details of the program.
Yeah, so the Paycheck Protection Program is exactly like it sounds, right? So it's a program that the SBA and the government put together that was meant to get money back into people's hands because of being out of work, specifically for the business to supply people's paychecks during this time when they're unable to operate. It is not meant for operating costs. We will cover what some of the costs you can use it for outside of the program. But it's not meant to pay off debt. It's not meant to, invest in a new product line or anything like that. This is really meant to help cover your normal kind of payroll expenses and then some other expenses like your rent, utilities, that type of stuff as well. But there's limited amounts that you could use in that aspect, and we'll get into that. But that's the important part of this is the Paycheck Protection Program, and we all need to remember that that's what the money is meant to be used for. Okay. Loans were approved for 2.5 times your annual, your monthly payroll, usually based off of your 2019 figures, unless you were a new business. Payments on those loans, just so you know, so most of you are getting funding over the last week or two, or in the next couple days. You do not have to make any payments for the next 6 months. So at the end of September, if you happen to not have your loan forgiven, that would be the first month, I believe, that you would expect potentially your initial payment. But during the next 6 months, you do not have any payment that you need to make during this, okay? Funds will be fully forgiven by the SBA and the government, so long as you use them for those qualifying and eligible expenses. Again, we'll cover what those are shortly. There needs to be a true, and this is probably not for most of you guys on this call, but I just want to cover this anyway, because it's been in the news a lot, right? You guys are all hearing about how Harvard and a bunch of very large companies are giving this money back. The reason that they're doing that is basically part of the SBA requirement is that there needs to be a need for the funds. And what they're focusing is on large businesses like that have substantial ability to obtain liquidity either through the public marketplace or something like that, really shouldn't be using the fund. So I don't think that covers most of the individuals that are likely on this call. Most of you guys are probably small businesses that wouldn't qualify in that aspect. But just remember that a part of what you signed on the application was you basically attesting to the fact that you need these funds to sustain your business in the next couple weeks. So just remember that, and that the funds need to be used for the specific reasons of the program. Now, I don't think that the SBA is going to beat people up if you happen to use it for something that's not eligible. Obviously, that will factor into the loan forgiveness, and we'll get into that in the end. But, the money was meant for those reasons. If in the end you do use it for other reasons, you would likely have it termed out into that normal 2-year period that we talked about on the last call, and we'll cover that as well later. But it's important, and what the SBA and the government wants is for you to pay your employees, to bring them back to work if they're on unemployment, and to get money back into their hands. We'll have a conversation about people and people who are on unemployment and getting more money that way and coming back and how to deal with that stuff as well. So hopefully this will be very helpful in that aspect. But again, this is really meant to support getting paychecks back into people's hands.
Awesome, cool. So I see some new people joining in. Just as a reminder, we have the chat functionality open for questions. So, and we'll be answering questions that you guys have throughout the session. I just saw Tim, I'm sorry, I started a Todd and a Tim in there, both adding some questions about just the stream. So as a reminder as well, if people want to come back and listen to this, we will have this recording available on all of our social media, Facebook, LinkedIn, YouTube, Twitter. So in case you want to reveal back to it, and that should be available shortly after this stream. And then we also have, for those listening on to YouTube, we also have a chat in there, so you can send messages in on the YouTube chat or on the Zoom chat. So actually, while I'm talking about a Zoom chat, Shane, I actually have a question for Robert Bailey. And the question is telephone considered a utility?
It is. We will get into that very shortly, but it is, yes.
Okay. Another question just came in from Jill Cleveler. Sorry if I completely butchered your last name. If your employees don't return, can you use it to pay new employees?
You can. We'll cover that part in a little bit more detail as well later on. But yes, you can replace somebody who is unwilling to come back. But I'll have more information on your need to potentially not do that as well. So we will cover that very shortly.
All right, awesome. So next question I have for you, Shane, is let's talk about the loan forgiveness part of it, because that is probably one of the more important parts of the PP program, and what it means to business owners, for everyone on this call, but also for you and I, what it means for us, what it means for the financial institution, what it means for Nutmeg State.
Yeah, so loan forgiveness, again, this is the part where some guidance is still yet to release, but I would anticipate the SBA opening up initial ability to start asking for loan forgiveness probably towards the end of July, possibly early August. Hopefully it's a little bit earlier than that, but as the government goes, you know, they're a little slow sometimes, so I don't know that I'd anticipate it earlier than that from my perspective. The important part is that the funds need to be used in the next 8 weeks, basically as of the day you get the funds, okay? So the 8-week period, what they call your covered period, starts the date of loan origination. So the date that you get funds is the date that you need to start paying your employees. It does not mean that they need to start working that day, and that is a clear distinction of this. It means you need to pay them. If you are a restaurant, if you are a type of business that you are obviously shut down or you just can't function, that's okay. It's not about operating your business. It's about paying people, whether you're the owner and you're paying yourself, or whether you're paying the employees that you have as an owner standpoint. Okay. During that 8-week period, you need to make sure that you spend at least 75% of those funds paying, using it on those qualifying payroll costs. And those payroll costs are the same type of costs that you submitted to us when you applied for the loan. Okay, so it's your wages that you pay people, owner's compensation, your vacation allotment for discharging people, group health benefits. Oh boy, am I forgetting a couple things? Hold on. Let me go up on here. Sorry, guys. Said this so many times, you think I'd just be able to reiterate it off the top of my head. State and local taxes, I knew I was missing something, and retirement benefits. So as long as you use it for those payroll costs, because that's what they define as payroll costs, in that 75% amount, then you should be okay for loan forgiveness. And we'll get into some other stipulations into that and in the calculation really closely as well. Now, what that means is that there's potentially 25% of the funds that you're going to get or have that you can use for those other qualifying expenses. And they consider other qualifying expenses rent on leases that were in use or signed prior to 2/15/2020. Same thing for mortgage interest, and it's specifically defined the interest on the mortgage. You cannot use it for principal pay down of your mortgage. It will only go and qualify towards the interest that is applied for that mortgage, just so you know. Okay, that's a little bit different than the rent part of it. And then for utilities, they define utilities as electric, gas, water, transportation, telephone, or internet. And these are expenses that the business pays And that's going to be important. We'll get into the individuals who are Schedule C and who have allotments to their house, that type of stuff. It's important to make sure that the business is paying these things themselves, and to make sure that you're keeping track of that during that 8-week covered period. So make sure you are tracking your payroll, what you're paying people in that aspect, what you're spending on expenses, whether it's your rent, mortgage interest, or those utilities. It's important for you to track that information over the next 8-week covered period after you get that loan. Okay. And telephone could certainly be defined as your cell phone for the business or something like that. It doesn't have to be a hard line phone. Okay. No more than 25% of the funds that you get, though, can go towards those other qualifying expenses that are not payroll. Now, that doesn't mean you can't spend 90% on payroll or 100% on payroll. You can absolutely do that. I've heard some people say that the way that they want to be able to get their employees back because they're getting more on unemployment right now is by offering them a bonus to come back. That is certainly okay. There's nothing against paying your people more. I'm not sure that makes a ton of sense for your business, in the short term, but if that's what you need to do and that's what you want to do, you can certainly do that as well. Okay. From a accounting standpoint, for those individuals who work from home or have home offices or run their business out of their home, your utilities, your mortgage interest payment, the way that I understand it as of today, those expenses for your home are eligible up to your point of deductibility, right? So your accountant normally will have a specific allotment that you put towards the business, right, for your house, and it's usually based off of square footage or something along those lines. And then they prorate what you've spent on your mortgage or whatever it happens to be, that expense, right? Your ability to pay those personal type expenses that are associated with your business are limited to what you normally deduct in your tax returns. Okay. There's a clear distinction from what I've seen between that. And I think that covers most of the eligible business expenses. Yes. And remember, it's the your interest on your mortgage, your rent, and then utilities all had to be in effect prior to 2/15/2020. That is the important part. If you go take out a bill now, or you get a mortgage now, that would not qualify during the 8 weeks period. It needed to be in effect prior to 2/15/2020.
Awesome. Hey, Shane, we got some questions here in chat. I'm going to get to, we're going to do a little bit at a time, just so everyone's aware. I know I got about 6 or 7 in the queue, so if I don't get to yours right now, we will get to them throughout the session. So I'm only going to take a couple of them now, and then we'll do the rest after the next session. So first question I have is from Kevin Harris, and it looks like it's a couple, Kevin Harris and I don't have the other name, but it says that they applied for my husband, who's a full-time realtor, as a non-incorporated business where the business has been impacted. So would the loan be able to cover his salary even though he has no employees?
Yes. So as an independent contractor, you applied and had to provide us your 2019 Schedule C. Even if you haven't filed it, the requirement, and there might be a couple people who applied earlier than the guidance that was released in this aspect, but what you're going to have to do is supply your 2019 Schedule C. And the net income, so line 31 of your Schedule C, is what the SBA and the lender is going to consider what your annualized income is, just so you know. So absolutely, if you're an independent contractor like that, yes. They do ask as we apply for loans to validate that you were in business prior to 2/15/2020. But as long as you can do that and show that you were in business, you absolutely are eligible and can use those funds to pay yourself as the owner. Now, when it comes to forgiveness time, this is one of the things I haven't seen a lot of clear guidance on. So we'll get into what documents you can provide, but I have not seen that they're actually going to ask the owner for a independent business like that, a single member type business, to provide any other documentation than their 2019 Schedule C. What they will look at is come tax time when you file your actual 2019 Schedule C, is that information matches what you submitted to us from the get-go. If you opted to, let's say, overinflate your net income last year in an effort to get a larger loan amount, and then you opt to reduce that come tax filing time because your accountant deducts stuff, that could impact your forgiveness if you end up lowering your actual net income in that aspect. So it's very important that whatever net income you use on that sheet, that you are aware that that's what the SBA is going to look at, and the IRS is going to look at as a part of what your sole proprietor income was. Good question.
Awesome. All right, we got one from Vicky Rivas Morta. If employees are given small bonuses for staying with us, are those considered part of payroll for those purposes of the loan?
As long as it's within that 8-week covered period, then absolutely it would be considered payroll.
Another actual payroll question to bounce off of that from Andrea Chase. Are payroll processing costs a qualifying expenditure? I know it's a similar question, but for payroll processing.
I think so. And I saw somebody else who had asked about like software as a utility expense. Those are not utility expenses as I've understood the definition of utility expenses. It is your telephone, your water, heat, electric, those type of expenses are considered utilities. Those other types of expenses, as you guys asked in that aspect, those are other operating expenses, not utilities.
Awesome, thank you. I'll do a couple more and then Shane will move on. And then, like I said, for those that we don't get to the questions right now, we will obviously address them in order. So next question I have is from Scott Smith. Once the 8-week PPP period, so the PPP, has expired, as a sole proprietor, can I apply for the PUA including the extra $600? That's the unemployment, I believe.
Ooh, that's a good question. That is a question probably for unemployment, unfortunately, but I would assume at that point, if you are stating that you are no longer working, that would be qualifying you as on unemployment. Now, the 8-week period should run you up to almost that July timeframe where that $600 extra bonus runs out. So you're going to just go back to what regular unemployment was, while it's expanded for people who didn't normally qualify, and it sounds like that will continue to stick until the end of the year. That $600 bonus that you got will likely go away by the time you get to that, just so you know. But I haven't seen anything that says that after you use these funds that you can't go on unemployment after the fact.
All right, we'll do one more question in this section and then we'll move on. And like I said, then we'll get back to the rest of the questions too. So the last question here for this section is from Tim Minard. I am a sole proprietor. Do I just write myself a check and put quote unquote payroll in the memo?
That is exactly what I would do. I would document the heck out of how you paid yourself. Yes.
I see Tim giving the thumbs up too.
Yeah, we don't have specific information on that, Tim, yet. They haven't told us. And that was where I was alluding to the fact that I think what they might just look at is your 2019 Schedule C and just make sure that that stuff all adds up to what was submitted to the IRS eventually. But in the interim, I would just document the heck out of how you're paying yourself in that aspect.
Awesome. All right, so like I said, we'll continue on with our presentation here. Like I said, next question up I have is from Andrew Brenton, and we'll get to that in our next break. So I guess, Shane, let's move on a little bit from the information on the PPP, but let's talk about what documents are needed for loan forgiveness.
Yeah, so loan documents are going to be very individualized to the type of business you are, whether or not you have employees, whether or not you're that sole proprietor, right? So we're going to go very high level here. The SBA can certainly change this at any time as well. But from what we're understanding, what you're going to provide us on the back end of this is very similar to what you provided on the front end, okay? So if you're somebody who has W-2 employees, that's likely your 941 for this covered period that you would have to supply to help validate that. It might also be some sort of 8-week payroll report to show what you've paid, because they are going to look at making sure that you didn't reduce people's wages by more than 25%. So I would definitely, if you've got not QuickBooks, ADP, that type of stuff, they're probably going to look for some sort of similar report. And then they're also going to look for some sort of document, and we haven't seen this yet, but it sounds like some sort of document that basically you are attesting to the fact that you use these the loan proceeds for those qualifying expenses. So it doesn't sound like it's going to be an overly large amount of documents. It's going to be similar to what you guys are already at this point, I think, used to providing. So that's what I've seen as of today. So more on that, I think from what I've heard, the SBA is planning on releasing some additional guidance on that actually next week, but that's the best I've heard so far.
All right, so staying on the topic of forgiveness, how could the forgiveness be reduced?
Sure. One more comment too on the other part. That also covers documenting your utilities and rent and mortgage expenses. So if you are paying those expenses, obviously document those too. I did not mention that, sorry. Yes, how will loans be reduced? I'm going to share my screen with you all because I think visuals are very helpful. I gotta make sure I'm sharing the right screen over here. Okay, Corey, can you give me a thumbs up if you could see the page we were looking at before? All right, perfect. All right, so those of you probably recognize this based off of the first call we did if you were on it. This is the US Chamber of Commerce. This is probably the best formula or layout of the formula that I'm seeing, although there is one update to it that I just want to point out at some point, okay? But basically, as long as, again, you use your payroll to pay at least 75% of what people were making in Q1 of 2020, and you use those expenses on these other qualifying expenses here, that remaining 25%, you should get full forgiveness so long as you do not reduce your full-time headcount for employees or, again, reduce their wages by more than 25%. Okay, so that first one, the full-time headcount, or what they call full-time equivalents, and they have yet to define what full-time equivalents means, unfortunately, or at least I haven't seen that yet. Basically, the way that you want to look at that is if you have 10 employees or you had 10 employees coming into this, they're going to expect you to maintain those 10 employees. I'll show you a version of the calculation that will show kind of the impact of the reduction of this if you don't do that. But basically, they're going to look at what your average headcount was in your base period. Most of you, that was your 2019 base period. And they're going to make sure that you still have those same amount of people on staff. As long as you do, then you are fine with that. If you do not, there are two different calculations you could use. And it sounds like you could use either one of these to your benefit. So whichever one works better for you, you can likely use. But you're going to have to basically take a look at however many employees you did not bring back. And then that's going to factor into the forgiveness part. And I'll show you an actual example of that shortly, so it makes a little bit more sense, okay? The other part to that is then making sure that you're paying all of those employees that you had on staff, again, at least 75%. If you've cut down their wages to, say, 50% to help sustain your business, that's okay, up to the point of loan funding. And then at that point, you need to bring their wages back up to at least 75%. If you do not, it will reduce your loan forgiveness based off of basically the pro rata share of that person. I'll give you an example of that right now, just so you're aware. But if you are looking at this document, just so you know, the one typo that I mentioned or the one change, the full-time employee equivalent is based off of your base period, which for most of you is all of 2019. The 25% or maintaining that 75% is actually Q1. So thank you, Crystal O'Mara, for pointing that out for me. That is a little different than what is in this form. If you notice on here, it said pay period in 2019 wages. That was recently updated to say Q1 2020. That doesn't mean it can't change again, but the most recent guidance was actually Q1 2020 that they're going to look at. Okay. So now all of you geeks like me who like math, you'll enjoy this part. Everybody else, you'll probably hate it. But I think this was a good visual representation if I can get it all on the screen very easily. All right, here we go. Hopefully everybody can see that okay. No, it's not the, if I do this. There we go, that might help a little bit. Okay, so in this example, I've got a company that has 10 employees. All employees are making $50,000 on an annualized basis, okay? This first example is what happens if one employee, I do not bring one employee back, okay? So I got a $500,000 loan, sorry, I can't do math, as a part of that, right, that I'm supposed to use during that 8-week period. But I, for some reason, did not bring back one of my employees, okay? So you're going to notice here, right, that my wages now are only that 450, and then I used 50,000 for what other qualifying expenses. Well, unfortunately, that doesn't matter that you use them for other qualifying expenses because your full-time equivalent headcount was reduced. And by doing that, if you could see the screen well, you've essentially reduced your loan forgiveness by that $50,000. So it's looking at that one person and what wages they would have earned during that period and reducing that amount during that period. Okay. Or I'm sorry, reducing what you would have been able to be eligible for a loan, right? Because it's essentially saying that you shouldn't have received that $50,000 for that employee. Okay. The other part to that is what happens if I reduce my employee's wages by more than that 25%. Okay, so this is a case where it's not quite as impactful as not bringing somebody back. So we're going to put in that they earned $50,000 again on an annualized basis, but that we only paid them $25,000 during that again, these are annualized basis figures, but we only paid them $25,000 on an annualized basis. What you're going to see on the screen is that basically that loan is not forgivable for $1,923, right? That's specifically associated with that one employee and their reduction in salary. It does not impact you on everybody, only the person or your employee who drops below that amount, okay? So hopefully this was a very good representation of it. I'm hoping in the coming days that we're going to have really good calculators out of there that we can share with you guys. I do have this one. I'm not highly confident this is 100% correct yet, so I can't share it with everybody, only so that I'm not putting you down the route path. But I think from a visual standpoint, this hopefully at least articulated and gave you some visual representation of what the impact would be if you opted to not bring somebody back. Now I want to, and this is I think a follow-up question, but I think it makes sense to talk about this now anyway. I want to talk about what happens if you want to bring somebody back, right? You want to hire them that date, but they don't want to come back, okay? Again, obviously this is about paying them, so they don't physically have to come back to work, but the scenario I'm hearing is that they don't want to come back to work because unemployment is more advantageous for them in the short term. They're going to make more with that $600 bonus or whatever you want to call it. Well, you want to give them an offer letter that states that they are rehired as of the date you receive the loan, okay? If they refuse to come back, get that in writing, and the SBA has said they will not hold you accountable for that person not coming back from a forgiveness standpoint. The employee, and this is between the employee and unemployment, but the employee technically does not qualify for unemployment the day that you give them that rehire offer letter. You technically cannot be on unemployment and have a job offer readily available. So take that as you will, do with that as you want. From a business owner standpoint, I think the important thing for you guys to know is if you do have a scenario like that where somebody does not want to come back, document the heck out of them not wanting to come back and the fact that you offered them to return to work, okay? And then that way you're being assured that your loan forgiveness won't be impacted in that aspect. You won't be following this calculation that I previously showed. And Corey, I guess I could probably stop sharing my screen now, huh? Can you do that?
Yeah, I'm bored of numbers at this point. No.
Yeah. It's important for you to create that paper trail in that case, okay? To make sure that you document that you offered to rehire them. That calculation that we were talking about not bringing one person back, that is irrelevant as long as you are documenting that. That one person not coming back is only if you elect to not bring them back.
Awesome. So I'm going to move over to our questions that we have in the chat for a little bit here. So I said, Andrew, we're going to get to, and here we are. So I have a question from Andrew Brenton. I know this goes back a little bit before we talked about, that's okay. What documents will be required to show we paid and how much we paid?
Yeah, so it sounds like we're going to look at your 941s, if that was something that you supplied prior, you have employees with wages, similar documentation to that, and then an 8-week payroll report that shows us what you paid those individuals during that 8-week period. It sounds like that's the meat and potatoes of what you'll supply. If you've used the the money for other qualifying expenses like your rent, utilities, or your interest on your mortgage, we would look for validation of that. So, a receipt or bank statement showing that money going towards that, or some sort of statement showing that you paid those expenses during that covered period. Last but not least, you'll likely have a form that you have to supply attesting to the fact that you use the funds for the appropriate costs.
All right, cool. Next question I have is from Amy Schoen. And again, if I'm butchering people's last names, I'm sorry. But staying within the 25% of the funds, how many months of rent can be included in the loan forgiveness? And can we pay more than 8 weeks of rent?
I do not think so. I do not think that you can use this for past due expenses. I haven't seen specific guidance on that question, and I've been asked a couple times, but my understanding of it is that the expenses need to be incurred during that 8-week time period. Now, that doesn't mean if the end of that 8 weeks falls on July 1st for you, or whatever, August 1st, and that happens to include that month's rent, great. I think that that's perfectly fine, because that date that you made that payment for that expense that was incurred during that 8 weeks period hit that 8 weeks. What it doesn't mean is that you can prepay your rent for the next 4 months. I saw that, Tim. I know, wishful thinking.
Speaking of Tim, I have a question from Tim. Is a webmaster doing updates to my site considered utility?
No.
Plain and simple on that one. Yeah, another question here from Ree Poirier Campbell. This one's a little bit long one, so I'm going to split it up for you, Shane. If our 8-week loan period doesn't match up against our pay periods, do we need to report on exactly those 8 weeks, or the pay periods closest matching for the 8 weeks?
Your pay period starts, or your covered period starts the day you get the loans. If that does not fall within a pay period, you need to figure out a way to show how you paid them starting that date of your loan origination. It doesn't mean that you have to all of a sudden cut them a check as of today, right? You can wait until whatever your next pay period is and then make that retroactive to the date of loan origination, and that would be fine. But it starts as of the day you receive loan funds. You have to pay them as of that date. You can't wait a week and say, I want to start this date.
Thank you. Question from Amy Schoen again. This might actually have to goes back into Tim's question a little bit. It says, can IT expenses be included in utilities?
I do not think so. Unless it is telephone related, internet related, those things would be considered utilities. Buying software, developing software, those things are not considered utilities the way that I understand it.
Awesome. So some, excuse me, some more utilities questions and rent questions. So should we look at the loan or grant as two parts, 25% towards rent and utilities and 75% to payroll? If so, if they only use 25% of rent for rent and utilities, would that 25% be forgiven and the other 75% considered the loan?
As long as the 75% was used for payroll and the 25% was used for those other covered costs like utilities, rent, your mortgage, then it should wholly be forgiven as long as it's during that 8-week period. It doesn't have to be a 75-25 breakdown. It could be 90-10. It could be 100% on payroll. If you only want to pay payroll and you want to pay those other expenses some other how, that's fine too. That's not an issue at all. But the most you can reduce payroll is by that 25% mark. And then you have that essentially that 25% wiggle room to use on those other qualifying expenses, but you're not required to do that.
Question from Robert Bailey. How will we how will we prove the need of the PPP loan to the SBA?
To be honest, if you're a small business, I don't think that they're going to bother you. I don't think so. From what I've heard, they are starting to review loans that are $2 million and over. If you are under that loan amount, it is basically the lender that is going to look at this information, and you attesting to the fact that you used it is likely going to be sufficient enough for the SBA. Now, obviously, if you attest to that and you didn't use it in that aspect, I'm not saying that the SBA can go after you at that point, right? If you misuse the funds, but if you make every attempt to utilize it during that period appropriately, I frankly can't imagine that the SBA is going to have the bandwidth to start knocking on your door, given that most of you are probably, smaller businesses that are on this call.
Awesome. We'll do about 3 more questions. We'll move on to the next part, and then we'll get back as well to that. So I have a question from Kevin Harris. What if we haven't filed our 2019 return yet and don't plan to do much before July 15th?
You're not getting a loan. Sorry. Unfortunately, it is a requirement of the SBA. If you're an independent person and you're looking to use that Schedule C to validate what your income is, to have that filed. Now, there was a couple people who applied as independent contractors on April 10th, 11th, and 12th, prior to the SBA actually giving the guidance that you needed to provide a Schedule C and a 1099 to validate your independent contractor income. Those individuals will want to make sure that the Schedule C matches what they used from a profit and loss statement, which is usually what they had provided for those couple days. But it will be important to make sure, and it does not have to be the filed version of your Schedule C. They did not say you had to file your Schedule C. They just said you needed to fill it out, and that Schedule C you fill out should be the one that you're going to submit later on. I think I mentioned this earlier. If what they find out is that you've deducted additional expenses outside of what you initially supplied us, that will likely impact your forgiveness if they catch it, if somebody catches it.
Awesome. Good questions, guys. All right, we'll do 2 more and then we'll move on. Like I said, we'll get back to the other ones here. Robert Bailey asks, if management worked without pay for last month and we only paid our employees, are we allowed to catch up during the 8-week period?
No. It is meant to cover payroll during that 8-week period only. You cannot pay past due expenses.
All right, and speaking of that, from Todd Russell, I have, will my loan be forgiven if I have to lay off my employees after the 8 weeks of PPP ends?
That does not factor in. It's specific to the 8-week period. So if you cannot sustain your business and you need to shut it down after that 8-week period, I believe that's okay.
All right, so like I said, I know there's some more questions in there, guys, and we will get to them as well as we break in between each session. So Shane, I'm going to ask you a question that I have. And what do I need to do to bring people back if they're furloughed or laid off?
So that offer letter, that rehire letter, is the important aspect. And you want to make sure that that offer to rehire is indicating that you are willing to bring them back and pay them as of the date that you received the loan. So if you're a week past when you receive the loan proceeds, basically what you want to state in that letter is that you're willing to rehire them as of today, right? And you're willing to pay them as of the date of loan origination to return to work. And again, this goes back to, if they refuse to do that, document their refusal, and then you will not have that forgiveness part impacted as long as you could show that you offered to rehire them and that they refused to come back. Now, again, once you technically rehire them or offer to rehire them, they technically no longer qualify for unemployment. You can't have unemployment, and you cannot have your PPP wages paid to you. You're double dipping in that aspect, and there will probably be some consequences for those individuals that do that. Now, it doesn't sound like the business owner is going to be held accountable for that. It sounds like the individual person who is trying to finagle the system in that way would be the one that would have to work through that.
So how about if I receive the money, but I can't operate my business while the state is shut down? What should I do?
It's about paying your employees. It's not about operating your business. You do not have to be open. And I know this stinks for people who are unable to work, but the program is meant to just basically give people a paycheck during this time frame. They came up with this 8 weeks because I think that's when they thought this would all be over and done with. You know, who the heck knows where this will all land soon, but you know, that's the case for this.
All right, so that being said, let me find the question I have for you. And what happens if I attempt to rehire my employees, but they refuse to come back to work for any reason?
So again, they don't have to show up at work as long as they're willing to accept you paying them. That is fine. If they flat out refuse because they want to get unemployment, then that's where you document that, because you will not be impacted from a forgiveness point as long as you document that. Again, technically, they are no longer eligible for unemployment the day that you offer to rehire them. You would probably want to suggest that to them as well, because I'm sure that state might look into some of that for certain people.
And I know it's something that we discussed earlier as well, but can I use the proceeds to pay past due payroll, past due expenses?
No, it's only during that 8-week covered period.
All right, well, now that you've answered that for me, how about, will businesses get forgiveness of debt income via a 1099-C?
This is the question of the hour that I'm seeing, and one that there is not a ton of clarity on as of yet. So to give you guys an understanding of what that question means, is the IRS and the government essentially want to prevent you from double dipping into your tax benefit in this case, right? So they're saying that if they're going to give you this money to use on payroll or utility expense, there's the potential that you will not be able to deduct that on your actual tax returns come when you file your 2020 tax information. Okay. The reason for that, right, is that the money didn't come from you to pay those expenses. It came from the government, and giving you additional tax deduction is essentially like giving you more money. Now, there's the flip side of that, and an argument that could also be said that, the fact that you're losing part of that deductibility actually reduces the effectiveness of the money that you're getting. And that is being debated in the government right now. So there is no solid answer as of this point, only that they are looking at that, and there is the potential that you are not going to be able to deduct the use of these funds off of your tax returns.
All right, I promise. I only have 2 more questions, and then
Hold on one second, Corey.
yeah. Oh,
It does
I'm
not
so excited.
mean, if you've ever gone through a debt forgiveness case where, say, a lender forgives $100,000 worth of debt and that becomes reportable income for you, that is not going to be the case for this. It is specific to the deductibility of expenses that I was talking about. It does not mean that you're going to get a 1099 loan forgiveness. And I think that was technically the initial question. They are not going to hold you accountable like that.
Okay, cool. So do I need to do anything with my taxes for the loan?
If you're talking about 2020 taxes, I think that's to be determined on the deductibility question that I was just talking to you about. In regards to 2019 taxes, the only person that really has to do that is the independent business owner who's going to use that tax return to substantiate what their payroll was for them. It is a requirement that you submit to us that Schedule C and 1099 that supports what you consider your income. And again, it's for those individuals, it's about your net income, not gross income. Everybody else, for the most part, your tax deadline that was extended shouldn't impact this at all.
All right, last question I have for you, and then we'll go into everyone else's questions here in the chat. Can I use the money for any other business need?
No, it's only those expenses that we talked about. Again, if you're going to invest in a new product line, if you're going to have somebody rework your website, I think that was something that came up, right? No, unfortunately, those are not considered utilities to the best of my knowledge at this time. Those are regular operating costs.
Thank you. All right, so we're going to move over to the chat now between now and the end of the session here. I know I got a bunch of them here lined up, so I promise we will get to your questions, guys. I'm going to get them. We're going to do them in order of what we received them. So next one I have is from Linda Blackburn. If an employee refuses to come back and the business reopens, will that employee be allowed to continue on unemployment?
Again, if you offer to rehire them, they no longer qualify for unemployment. So document the heck out of your offer, document the heck out of their refusal to come back. And as the owner, you are covered at that point. Now it is my understanding that they are not supposed to be on unemployment at that time because technically unemployment is you not being able to get a job. And if somebody's willing to rehire you, then you technically shouldn't qualify for unemployment.
Question from Tim Maynard. So the shutdown happened mid-March, and the PPP covers 2.5 months of these funds. Should these funds cover expenses and payroll from mid-March through May?
Nope. From the date that you get the loan in your hands, so the date of your loan origination, that 8-week period starts that day and goes out 8 weeks.
Question from Jill K. This came through our email. How long do they have to sign the documents? / when does the PPP offer expire? She has a two-parter, so we'll start with that part first.
Yeah, so we're getting a couple of these as people are getting loan documents over the last day. So I want to be very upfront about your need to sign documents in most cases. So the SBA only gives the lender 10 days from the date that we got the initial approval with them to get the funding in your hands, or we lose the SBA approval, and then come forgiveness times, we're probably gonna have some problems. So if you have documents, I would suggest you sign them that day. Holding off will not do, I mean, essentially the documents are gonna still state the date that the loan was originated, and that's going to be the date that you're going to need to use. If you wait a week, one, you probably have now lost your actual SBA approval because you've eclipsed that 10-day window. And two, it's going to still look at whatever the loan origination date is, and that's your covered period date, start date. So don't wait, unfortunately. It's not going to matter.
So second part to that question, which I think you kind of went over as well, is how long after I sign do the funds become available? And apparently it was read that you have to be available after 10 days.
Right. So the date we get SBA approval, we as the lender have 10 days to basically get the loan documents and funding into your hands. So that's that 10-day window I think that they're talking about. Corey, what was the first part to that question?
It was how long after I sign do the funds become available? I would like to get the money 10 days later, so I have time to prepare my employees to return. Nope. The later, the better.
Doesn't work that way. It's the day that you get the loan documents, and that is your funding date, unfortunately. You cannot hold off and try to coincide it with a pay period. Unfortunately, it does not work that way. The date that you get your loan documents, as long as you don't sign them at 9 o'clock at night and whatnot, you should get funding that same day. So if you signed your loan documents today, you should get your funding that same day. If it didn't happen to hit your account today because of it being late in the day, it would be that next morning anyway. But the date of your closing, the date that the loan documents get to you, that is the date of the start of your 8-week period. You cannot defer that date.
So speaking of talking with employees, question came from Ken. Would it be okay if the letter to the employees was via text rather than letter?
I would put it in a letter if I were you. I would hate to show up to court with a text message if it ever got to that. That's up to you, I guess. I would recommend giving them something on your letterhead, something formal, that states the rehire date, what you're going to bring them back from a payroll standpoint, anything that you can show that you're following the program parameters as the owner of the business. And then again, make sure you document their refusal. Now, from a refusal standpoint, you might not be able to get them to physically sign something saying, I'm not coming back. Maybe you can, if you say that there's repercussions if they don't. And then maybe in that instance, a text message being saved might at least give you something to fall back on. But if I were you and I was the business owner, I would not take a text message sent out as that proof.
Awesome. So just before we move on to the next question, guys, I know we're approaching 4 o'clock and this webinar was scheduled for 4. I'm more than willing to keep going, Shane. I know you are. So we're going to keep answering your questions until we're done, guys. So if some of you have to sign off at 4 o'clock, that's fine. We will have this recording on all of our social media platforms, YouTube, Facebook, LinkedIn, Instagram, Twitter. So you'll be able to find that later tonight on all our social medias in case you have to sign up at 4. So next question from Robin. In 2019, I had more employees, but as of January 1st, I only had one employee. And that's what I said on the list I had to give. Is that a problem?
If you're not going, if you ended up getting a higher loan amount than you can physically use to pay that one employee, I would suggest you putting the other money aside and not spending it, because that is very likely that it will not be forgiven because you don't have the ability to keep those headcounts. Now, the amount where you're paying them the same amount, so not reducing their wages by more than 25%, that's based off of Q1 2020. Again, thank you, Crystal, for that. The full-time headcount is based off of your 2019 average. So what I'm understanding her kind of response is that 2019, she had a lot larger headcount. Now 2020, she does not. The other alternative would be to go hire people during this time frame and I guess pay them through that. But if not, I would just suggest you might want to not consider using that money because they will likely see that in the forgiveness portion.
Awesome. From Tony Warner, annually we give our employees salary increases on June 1st. Is this still allowable with the PPP?
There's nothing saying you can't pay people more. It's about making sure that you don't pay them less. So absolutely, you can give them bonuses if you want. I don't think there's anything wrong with that. I haven't seen anything that states otherwise.
Question from Lucretia Flowers. Again, I'm sorry if I butchered the name. So marketing expenses are not considered other.
No.
Okay. I know we said that one earlier too. From Cindy Lavoie, if your PPP period began April 22nd, can a utility bill that you pay on May 1st for a period of March 20th through April 20th be included in the utility costs?
I would, if you got your bill during that 8-week time frame, then yeah, I wouldn't see why you can't use it for that. Now, if you pull out your December 2019 bill and you said I paid this, I don't think that's going to work, guys.
From Anuj, can you count overtime pay for employees if they did not receive it previously? For example, this individual has staff member who may need to work 50 hours instead of 40. She worked during the comparison period in Q1.
So I don't think there's any issue with that, right? You need your employee to, you're in one of those businesses who's maybe an essential business and like us and like nurses and doctors are working well over their normal schedules at this point. There's nothing wrong with having to pay them overtime. Now that does not mean you can take part of their overtime and reduce somebody else's salary by more than 25% and say that I took it from this person and moved it to this person. I don't think it works like that. As long as you maintain that 25%, you're okay by reducing other people's salaries in that aspect and then using it on other qualifying payroll costs. You know, the important thing is to make sure that you're not reducing anybody's wages by more than 25%. If you pay them more, don't see any issues with that.
Got a couple questions here from Charity Lane and Lifeway Church. Phone bills regarding cell phone bills, are they included as utilities? And if so, it has to be paid through the business by the business directly, or are reimbursements allowed?
So reimbursement would actually qualify as payroll costs from what I understand. That would not be utility costs. The utility costs would be the business paying specific bills to the business. So if the cell phone was in the name of the business and the business paid it, that would be a utility. If you were reimbursing somebody for a fringe benefit like that, that is a payroll cost.
Speaking on utilities still from Charity Lane and Lifeway, when it comes to utilities, they've seen transportation included in utilities list. What does that exactly mean, utilities? Vehicle payments, gas, insurance?
Interesting. I have not seen vehicle. Let me pull up my form quickly and just make sure I'm not misspeaking over here, but
while you look that up, I'll just remind everyone, like I said, I know it's hitting 4 o'clock and I probably sound like a broken record, but we will have this stuff available later tonight if you guys need to sign off at 4. I got about 10 to 15 more questions, so we should be done here in a little bit. Yeah. Sorry, Shane.
So I do see where it says transportation. That's a good question. I have not seen specific guidance on what transportation means. I'm assuming you might be able to use it for gas from a vehicle standpoint. It does not mean you can use it to pay a car loan, but I would interpret that as transportation being the costs to pay gas for the vehicle, that type of stuff.
Question from Lucretia Flowers again, in regards to rent that's past due. Can they use the 25% to pay that past due rent?
No, the rent has to fall within the covered period from what I understand. So again, you know, if you're paying, what are we in now? We're in May, right? If you're paying May's rent as a part of it, I don't think that would be an issue, even if you've, you know, May's, you know, not in that period. You can't do it for 2019 though, right? You can't pull out past due rent payments from 2019 and say, I'm going to pay that.
From Sandy Jordan, we applied for the EIDL, but have not received anything yet. It is my understanding that we will receive the EIDL. That would be just subtract that amount from the quote unquote forgivable portion of the loan. Is that true? And how does that work?
Yes, there's not a lot of clarity around this yet. And this part is kind of a mess, unfortunately. So it's my understanding though, that would only impact or reduce your loan forgiveness if you ended up getting that EIDL loan prior to 4/3. Anybody that got it after that, for some reason, it sounds like might not have that factored into there, because you should have included it in that. Now, if you have not gotten your DL loan at this point, I don't know that I would anticipate getting it from what I'm hearing. I think the SBA has run out of money for that specific program at this point.
From Andrew Brenton, do we have to rehire their employees at the same position or compensation plan?
I don't think the position matters at all. Compensation, just don't reduce their wages by more than 25%. You've got a 25% wiggle room essentially to bring them back.
From John Hunter, if you are an LLC and don't have a Schedule C, do they use the 1065 form for income verification?
Yes. Part of the documents within the 1065. So if you're a multiple member LLC, they're likely going to look at your K1s. And it is, I want to say, line 14A to get super granular here, which is what they consider your allotment of the net earnings of the business. So individuals like that would look at that. If you're a single member LLC, they're likely just going to take your net profit off of that 1065.
Sorry, it was muted. From Todd Russell, if I have 2 full-time employees and 3 part-time, my payroll numbers to the SBA included all 5 people. Am I expected to bring back all 5 or just the 2 full-timers?
I have not seen where they define full-time equivalent employees very well yet. So I guess that's a muddy area of what is considered full-time equivalents and what is considered part-time equivalents. So the best way I would say it, and I'm not positive about this, so don't hold me to it, is if you're 30 hours or more, that's the general definition of full-time as I understand it. If you've used payroll that you've paid people, whether they're part-time or full-time, to qualify for the amount of loan that you've received, you're going to need to find a way to spend that 75% on payroll costs. They are only going to look at your full-time equivalent headcount. Okay. Unfortunately, that, a definition that's very vague right now. So part-time people, it might not factor into those individuals quite like it does the full-time people, but I think we need to figure out what full-time equivalence technically stands for. And unfortunately, there's no real great definition that I've seen from the SBA itself.
From Brett Isaacson, so if they have reduced hours, can they still get partial unemployment?
I don't think so. That's a question for unemployment, to be honest. I don't think so, because you're not supposed to have reduced their wages by more than 75%. And I think if I remember understanding it right, to qualify for partial unemployment, it has to be a substantial reduction in your wages. So I don't know that that 25% would be enough.
From Robert Bailey, if I reimburse an employee over 65 for their Medicare and supplemental healthcare insurance cost incurred during the 8-week period, as long as I maintain copies of his bills reimbursed, will that be okay for health insurance costs?
They define it as group health benefits. If it is a group health benefit, then yes. If it is an individual one, then I do not think so.
From Amy Schoen, are you allowed to pay employees for reduced hours, not more than the 25% reduction, so that the employees can get unemployment and the $600 CARES Act payment?
No, you cannot reduce their wages you cannot have them on payroll and be on unemployment at the same time. You're double dipping.
And there's a second part of that question. Can you increase the amount that a salaried employee earns from $70,000 a year to $100,000 a year annually just for the 8-week period to maximize their payroll?
Sure, as long as it's not at the hindrance of somebody else, right? You opted to increase their salary to offset not bringing somebody back. That would be a problem. If you just increase their salary because you're being generous and it's the way you're going to get them back to work and not have that battle about unemployment, I don't see anything wrong with that. Obviously, that cuts into your business's ability to use part of that 25% elsewhere to sustain your business in the short term. But I mean, I don't think that there's anything wrong with that from what I've seen.
From Ken Pelletier, and I know we've kind of covered this one, but what happens if you have salaried employees? That's just a question on there. So
yeah, I mean,
Ken, if you can give us a little bit more.
Either salary or hourly, right? I mean, during that 8-week period, you're going to have to figure out what their weekly pay or whatever you want to call it during that 8-week period is on an annualized basis and make sure that you pay them that.
From Stephen Lowe, if my final Schedule C for 2019 has more deduction than the submitted version, but both show net income over the cap of 100 grand, will forgiveness be affected?
Probably not in that case because you were capped at that 100,000. So to give maybe some math to that, if you said, if you normally earn $50,000, right? Corey, repeat that question again. I want to make sure I answer this right.
So sorry, in my final Schedule C for 2019 has a few more deductions than the submitted version, but both show net income over the cap of $100,000. Will forgiveness be affected?
No, I don't think that it will in that case, because again, you're going to be able to show that you at least paid yourself the annualized $100,000 amount during that 8-week period. So anything over that is likely going to be irrelevant because your payroll amount wasn't factored off of that larger amount. Now, if it dips below 100,000, right? So you gave me something that said $150,000, but now you're at $50,000 of net income. You've got problems then.
From George Lim, if they use PPP 100% for payroll, which is calculated at 2.5 months payroll, but only have the opportunity to distribute 2 months and still have only distribute 2 months and still have half a month available, can you get forgiveness on the 8 weeks and just pay back the half month?
Sure, yeah. I mean, you could certainly save that money and pay it back, or you can likely just hold on to the loan at 1% if you want and pay it back that way too.
From Todd Russell, if I just use the first 25% of the PPP to pay for utilities only, do I owe the 75% or do I owe the full 100%?
I believe you're going to owe the 75% back.
From Lucretia Flowers, is business insurance covered as a utility?
No, not that I've seen.
From Ken Pelletier, what happens to the money if an employer refuses to accept does it go back to the SBA?
So the business that applied for it refuses to accept the loan that they applied for? Is that how?
I think it's the employee refuses to accept it.
So that goes back to technically they shouldn't qualify for unemployment, I think, right? Corey, is that how you read that question?
That's how I believe I'm reading it as well.
Okay. So yeah, I mean, obviously it's about documenting their refusal to come back to work. As long as you've documented your offer to rehire them and their refusal of that rehire, then it will not factor into your loan forgiveness. If you did not document that, then it might.
From Andrew Breton, if we had team members resign in the last 30 days, will that bring down our total number needed to bring back?
Yes, I would suggest you try to hire somebody in their place.
And a similar question on that, I guess you just answered this one, but for Lucretia Flowers, just to acknowledge, if we hire new employees, I'm sorry, can we hire new employees if old ones don't come back? So yeah, that kind of answers that question as well.
Yep.
So next question is from Tim Maynard. Will loan forgiveness be given before loan repayment starts?
It should, yeah. So, and I don't think I covered actually this, so my apologies to everybody. The 6-month window should be over in September of this year. In all likelihood, from what I'm understanding, you should get loan forgiveness before that ever takes place, before your first payment would ever be due, as long as you follow the parameters and that you're not waiting forever to apply for the loan forgiveness. Once you actually apply for it, the lender does have 60 days to get back to you. In the end, I can only imagine that most of them are certainly going to try to do it well before that 60-day period. But as long as you follow the programs, you should not have to pay any of this back. You should not run into a scenario, unless you're just not supplying the documents that you need to, where you're having to make a payment in that aspect.
Question from Ken Pelletier. All of our employees will lose an average of $500 a week if they don't accept the PPP money, and they would lose their unemployment if they don't accept it. We don't want to push them in that position. Could we return the loan?
Sure, yeah, you can absolutely return the loan. I want to say that you might even have 10 days to return the loan without any penalty.
From Lucretia Flowers again. Can we offer a, I'm sorry, there's a little typo in this question. Can we offer a, I'm not sure what they're asking for here. I don't know if you can read that one, Shane, in the chat. Can we offer a no us employee to come back? Not Lucretia Flowers, if you don't mind retyping that question.
Offer them more money to come back? Is that kind of the way that's probably being asked? So I think the scenario people are running into is that people are getting paid more. They're getting more money with that
bonus
benefit.
They're asking, it was bonus, that was the word. Can we offer a bonus for the employees to come back?
Yeah, absolutely. If that's what you have to do to bring them back, and you don't want to have that battle with unemployment with them, you can absolutely opt to pay them more to get them to come back. Are you required to do that? No. Are they technically not eligible for unemployment the day that you make that job offer? Yes. But if you want to be a good boss and just help them out in that scenario, there's nothing that says you can't do that.
From Deborah Glass, do I have to use the full amount of the loan in the 8 weeks?
Yes. If you do not, then that will be you not using it for covered expenses during that 8-week period, and it will reduce your forgiveness.
Another question from Ken, and I know we kind of asked this one earlier as well, but just to reiterate, most of our employees are part-time and not full-time as per our payroll record. How does that work?
So we're still waiting on a better understanding of what they consider full-time equivalents. So it's kind of a gray area, I guess. They're only going to look at your head count for full-time equivalents during the 2019 or whatever what they considered your base period. And the base period, as I understand that definition, is whatever time frame we used to figure out your loan amount. That could have been 2019. It could have been the preceding 12 months to the period. So like some people could have used February 2019 to February 2020 as their base period. So they're going to look at your full-time equivalent headcount during that period. If it's changed, that's okay. They're going to average it out over that whole year period and figure it out based off of that. If you've supplied 941s, your 941s should be a good guide as to what to look for an average for your full-time headcount.
From Lucretia Flowers, is our payroll service fee included in payroll costs?
No, that is a separate expense. Payroll is paying people, or their, let me rephrase that, or the other payroll type expenses like health benefits, retirement benefits, some of those fringe benefits that would qualify. Things like, here's the other part, like things like tuition reimbursement, those are technically not payroll costs. So there's some things that they do consider payroll costs, and then there's other things that you supply to an employee that they don't consider payroll costs.
From Robin Morel, my loan was based on the salary of one employee, not the others. I had it in 2019. I had let the others go prior to any of this stuff happening. So I guess just more of a statement, wondering if there's any impact there.
Did I understand that as she's got less employees now, or she had less employees last year? She's got less employees now,
It was the loan was based on a salary of one employee and not the other ones they had. She had let the other ones go prior to any of any of the COVID stuff happening.
So as long as the loan amount was based off of that one person, and that one person is the person who's going to be employed during that 8-week covered period, then I don't see an issue with that at all. Where you would run into an issue is if you had, say, 10 employees in 2019 and you use that amount and what you paid them to qualify for a loan, and now all of a sudden you have one person, right? And then your full-time headcount is out of whack at that point. And what's going to happen is they're going to say, okay, well, you didn't bring back 9 people, so you're going to have to reduce the forgiveness part based off of those 9 people not technically being employees anymore.
From Charity Lane Lifeway Church, 8-week period. There's a bit of confusion on the 8-week period in terms of the quote unquote costs incurred and payments made. In terms of payroll, it is hours worked or the day payroll is pulled from the account.
You have to pay, the best way I think I can answer that is you have to pay them as of the date. Let me read that, sorry.
It's near the bottom, Charity Lane Lifeway
no,
Church. Yeah, came in at 4 o'clock.
So I don't think that there's any distinction of them. Again, this goes back to the fact that there are businesses that can't actually operate or have their employees show up. So I don't know that hours are relevant or anything along those lines. It's about paying them the same amount, whether or not they work 40 hours, whether or not they work technically no hours. If you pay them for their 40 hours, then I think you're fine. And you just want to make sure that those payroll payments are all for those 8-week covered period. Hopefully I answered that.
From Sandy Jordan, what about the DECD bridge loan? They just got a text from the executive director that they qualified for the bridge loan. They have 24 hours to accept. Does that affect the PPP?
No, they're 2 different programs. And to be honest, you're talking about the Connecticut program? Weird, I didn't even think that was still open. So no, they're 2 separate programs. You can certainly get one and the other. There's nothing wrong with that. I was not aware that the Connecticut DECD bridge loan program was open anymore. The best I had known, that was shut off 2 days after it started. I could have missed something though.
You don't miss anything. From Ken Pelletier, do we need to pay them weekly for 8 weeks, or can you give them one check for an 8-week period?
I've seen that you can give them one giant check. So as long as you pay them for that 8-week period, then that should qualify for that loan forgiveness.
And just to go back one question, I'm sorry, from Sandy, she did say that they applied for the DECD a long time ago. So looks like they're just getting a response back.
Yeah. So then, no, you can certainly have that bridge loan and the PPP loan. There's nothing that disqualifies you for that. The same goes for the EIDL loan with the SBA. So that's the specific loan that was $2 million you could apply for. You could use that loan for working capital costs, debt refinance, that type of stuff. You can absolutely apply for that loan as well. Now, my understanding is that both the state bridge loan and that EIDL loan are actually out of funds. So you can apply for it on the SBA's website, but the chance that you're going to get money at this point anytime soon without them appropriating more funds is probably slim to none. Hopefully I'm wrong.
This one, Robert Bailey, trying to get some brownie points out there. Corey and Shane, thank you so much. This is an outstanding webinar and it's very informative. You provided such great deal and information. Thank you, Robert.
Thanks.
Going back to Charity Lion and Lifeway Church, as far as the paper copy that needs to be signed, is it just the second copy that was the DocuSign email, or is there something that will be mailed to them to sign?
No, so in the DocuSign itself, we uploaded 2 copies. One copy that you actually sign digitally, and then one copy you have the ability to just print out that does not have a digital signature on it. If we only sent you the one copy, you would have had to print it out before that to get a copy that you could hard sign. It is important to send us back the hard wet signature copy. You will not be able to request loan forgiveness without sending that back. The SBA is very clear about that. They expect the lender to have a wet signed copy of the loan agreement. And it doesn't have to be dated the same day, but it has to be the same agreement and it has to be a wet signature. So you did get 2 versions of the document, one that had DocuSign signatures in it, the second that you were supposed to send back to our Rocky Hill PO Box, that Nutmeg State FCU, PO Box 66, Rocky Hill, Connecticut 06067. So, and make sure that you put attention business lending in there, please, or your documents, might end up taking a while to get to us.
From Kelly Messon, if I am self-employed, do I just pay myself 75% of loan? And if so, in what increments?
I think that kind of goes back to the question before. It doesn't necessarily matter how you pay yourself during this 8-week period. You could pay yourself weekly. You could pay yourself all at once. That's fine as long as it's within that 8-week covered period. And for your self-employed people, this is where they have not given us good guidance as to how you're going to have to prove how you paid yourself. It almost sounds like they're not even going to look at that information for you. It almost sounds like they're just going to say, as long as your Schedule C was submitted appropriately, then that's enough. But they haven't given us solid answers on that yet. So that's one of the ones that I think is kind of forthcoming in the next couple of weeks.
From Charity Lane, Lifeway Church, if we got the 10,000 from the EIDL, does that reduce our PPP by 10,000? Can we get the wet signature copy dropped off in the night deposit? I guess it's a two-part question, excuse me. So let's start with the first one. If we get the 10,000 from the EIDL, does that reduce our PPP by 10,000?
If you had received the EIDL prior to April 3rd, I believe it technically should reduce the forgiveness portion for you. Yes.
And then the second question.
Documents in a branch, that's certainly okay. Just make sure that it's in a envelope or something where the papers are not going to get all commingled with that stuff.
Agreed. Last question here I have here from Lucretia Flowers. Again, it's another 2-parter. Would our award be directly deposited into our business account? That's question 1.
Yes. So I think the question is the loan going to be funded into your Nutmeg account? Yes. So if you were not an existing member prior to applying for this loan, you became obviously a member, and we talked about certainly the benefits of joining the credit union and moving your relationship over to us. It is being deposited right into your business checking account at Nutmeg. So if you are in need of the funds, certainly you could reach out to us and we could work on getting your account set up so that you can either connect your payroll or get the money where it needs to be so that you can pay people.
All right, I got some last minute. I know we answered this already, but the question, can we pay our past due rent for March and April? I know that the answer was no to that, correct?
No, that is not during the covered period. I think you could absolutely make the case for paying, if you got your loan in April, for using it during that period. I do not think you'd be able to sit there and say, I want to pay, February or March, because that was before anybody would have ever been able to get a loan.
All right, guys, I think that's the last question I have. And for time's sake, that's going to be the last question that we answer. So a couple of things I want to go over real quick. Shane, I'm going to get your beautiful face off here for a second. I'm sorry. I know how much you like it, but I'm going to share a screen for you guys, for everyone to see. So this is our information. I know Shane had said it earlier on how to contact us. You can go to our website, www.bankingawesome.com. You can email us and contact us. Now, if you want a direct answer to a question that was not answered here, I would highly recommend to please email that email listed there, businesslending@nutmegstatefcu.org, or just give us a ring Monday through Saturday at 860-513-5000. If you can't write this down all fast, that's okay. I'm going to have it in the description of these videos when they go up live on YouTube and Facebook later on today, but I'll keep this up so everyone can see it as well. I got a lot of thank yous from Tim and Sandy, so thank you guys for listening in. I know taking the time out of Thursday is a little tough. Thank God it wasn't Friday, right? Shane even said thank you to everyone in there in the chat. So more importantly, really thank you, Shane. I'm here just a mere guy asking questions too. You're the brains behind the operation. I'm just the brawn, I guess, right?
Hey.
So guys, thank you so much for calling in. We will be ending the webinar now. I will tell you again that this will be available later tonight on YouTube, Instagram, Facebook, Twitter, and LinkedIn. So you'll be able to find them very easily. So again, thank you for everyone calling in. Stay tuned to that social media for our series of webinars. We try to do these once every 2 weeks or so on different topics. So just keep an eye on our social media. Tell your friends, tell your family, and more importantly, stay safe out there. Bye, guys.
That's all.